Welcome to the Fear and Greed Afternoon Market Report for Wednesday, the 19th of May 2021, where in just a few minutes I tell you everything you need to know about what's happened in financial markets and the world of economics today. I'm Sean Aylmer. The S&P ASX 200 fell nearly 2% today, erasing the gains of recent sessions in the worst day of trading in 3 months. The S&P ASX 200 closed down 1.9% to 6,932 points, led lower by materials, energy and industrial stocks. All 11 sectors of the index ended lower, and only one stock in the top 50, James Hardie, which had a pretty bad day yesterday, made it into positive territory. The biggest losers were the big miners, following commentary out of Beijing that China was looking for new sources of iron ore and could develop its own industry. BHP, Fortescue Metals and Rio Tinto all ended down more than 3% today, but there was red ink everywhere. Woodside Petroleum, Newcrest Mining, Transurban, Telstra, Macquarie Group and Commonwealth Bank all dropped by more than 2%. It was really aggressive selling. So why the plunge? There wasn't one single event, though analysts had plenty of suggestions. There was the commentary from China. Wall Street had a bad night with the Dow Jones Industrial Average ending 0.8% lower, the S&P 500 dropping 0.9%, and the tech-heavy Nasdaq closing down 0.6%. And traditionally, the run into the end of the financial year can be a bit choppy as well, as investors buy and sell to minimise tax payments. But basically, the market fell at the opening and it just never recovered. Given the big fluctuations, there was a surprising dearth of corporate news, though what was around was pretty interesting. EML Payments' share price tumbled 46% after the Central Bank of Ireland said it had significant regulatory concerns around its Irish subsidiary PFS Card Services. It relates to the subsidiary's anti-money laundering compliance and governance. Not good. EML, which operates around the world in digital gift cards, sports betting and salary packaging, said it was too early to comment on the impact the announcement would have on earnings, but investors made it clear what they thought. Artificial intelligence group Appen announced a restructure, triggering a 13% jump in its share price. The group has been hammered in recent months, and its share price has halved since mid-March. The group will cut costs, including reducing staff, and reorganise its business to better meet customer demands. And travel and tourism group Webjet said 9-month revenue to the end of March fell sharply, leading to a net loss of $157 million. That's bigger than the loss made for the full 2020 financial year. The group said there was strong pent-up demand for travel though, particularly leisure travel, and Webjet was ready to capture it. But it needs international borders to reopen, and there's not much it can do about that. Its share price was up 0.6% today, which was a pretty fair effort. In economic news, March quarter wages grew by 0.6%, taking the annual pace of change to 1.5%, according to the Australian Bureau of Statistics. That's still well below the levels that the Reserve Bank wants to see to help get some inflation back into the economy, but at least they're on the rise. The Westpac Melbourne Institute Index of Consumer Sentiment fell 4.8% this month from its record highs of April. The measure was taken after the federal budget, and the reading is still the second highest since April 2010. Westpac Chief Economist Bill Evans said the survey continued to indicate that deteriorating housing affordability was weighing on sentiment, although price expectations remain high. And Federal Treasurer Josh Frydenberg said he wasn't worried about a potential spike in inflation this month. The Aussie dollar is trading at 77.8 US cents. That's down just a smidgen. That's it for the afternoon market report for Wednesday, the 19th of May 2021. Join me tomorrow morning for the regular edition of the Fear and Greed Business Headlines. I'm Sean Aylmer. Enjoy your evening.